Hello everyone, how's it going? In this video, we're going to talk about Cosmos Health Inc., trading under the ticker symbol COSM on the Nasdaq. So, Cosmos has recently also attracted a huge amount of attention from probably retail shareholders, and for good reasons. Cosmos seems to be yet again another one of those companies that is under huge amount of short pressure. And the shorts are saying that this company is probably going to go bust and we're going to short it. The profit margin being between the price when they've entered in their short position and zero. So if the stock is at zero, they don't have to reimburse to the brokers, and they would have pocketed a profit of $4.70. If, of course, they have decided to enter in a short trade now. Now, if they have entered in the short position back in $10 or $15, then the profit margin is going to be $10 or $15. So a lot of people are saying we're gonna aim for a short squeeze with Cosmos. And yes, I definitely see the appeal of having a trade into this, and I think that it can go to very high prices. Like, for example, the stock more than 10x'd between November to December of this year. Why? Probably because of the same reason. A lot of people have seen that, there's a play in this. There's a huge amount of short there's a huge amount of short positions, and if we just force them to redeem, then yeah, they will have to redeem to avoid losses, and we're gonna have a payday with this. So with this kind of logic, I would argue that yes, it does have its validity. It has worked a couple of times, not in a sustained manner though, but at least it has worked. I would say, at least with AMC, GME, Ethereum, CEI, to various degrees. So it's going to have at least a takeoff. Doesn't mean that the takeoff is going to keep taking off. No, it usually doesn't mean that. But even so, despite the fact that there can be some appeals to it, I will have to say that nowadays I am personally a little bit more skeptical about the possibility of companies just seeing the writing on the wall and not doing anything about it, not doing anything dodgy about it, especially when the short selling is very significant in volumes. Because institutions don't want to lose a huge amount of money just because of freak events. Because we also have to call them for what they are. Initially, for AMC and GME, the shorts were taken by surprise. They were not seeing a huge amount of people just piling in to force them to redeem as a trade strategy. So this is why I think that in time, they have learned different ways to make sure that this scenario doesn't happen again. People were aiming to hurt Citadel. It certainly didn't hurt Citadel per se, but it hurt Melvin, okay? And this was enough for many people to think about strategies beforehand. And recently, there has been this incident with MMTLP where the company was going through a merger. It didn't tell people, FINRA didn't tell people that it's going to stop trading. It did. And now a lot of people are standing to lose a huge amount of money. And right now there are protests and possible class action lawsuits as we speak. Anyway, this is just a tangent saying that when the market sees that a significant portion of its stakeholders are in danger to lose money, they will act in one way or another, whether it's by the books or not. They can come up with a different set of books and different set of rules if it suits them. I think that's how things are. I saw some comments in some of my videos that they were like, "Oh, but so you're basically saying that the market is a big lie?" Well, a lie is like if they're not so obvious. Right now, I think it's an overt lie. You see what I'm saying? Like they're lying to your face, basically, saying that, oh, we're not trying to protect some people, but we're actually doing the things that actually protect them. So yes, it is a lie if you think that these stakeholders are truly independent one from the other. And to another aspect, I will have to say that at the same time, we have to. I think that we have to follow those trends or to follow some kind of unwritten rules until those rules get changed. If you want to change them, definitely by all means go join the class action lawsuits, go force a Senate hearing or a Congress hearing on FINRA. But my point with Cosmos is this is a company with a relatively fragile financial health. In fact, I think that their management said themselves, the company's going concern is no longer assumed. In other words, this company might go bankrupt. This company might go through Chapter 11 or even Chapter 7. So this is why, like, in this kind of scenario, we cannot say that as the writing is on the wall, nobody will know what else to do. Like, this company could merge with another company. And then the question is, what's going to happen to all the shorts, right? To all the people who are long this share. What if FINRA decides once again that, oh, you know what, we're not going to trade Cosmos 4 days or 5 days ahead of time? So, given all this, I would say that yes, there's an appeal to trade Cosmos. And I will go even further. If you believe that a short squeeze is going to happen in the next couple of weeks, by all means, go ahead over, like, within the next couple of weeks, okay? Gradually buy it over like 7 to 10 days and hope for the best. Now, regarding the probability, whether this is going to happen again, I think another bump is due to happen at some point. Like, for instance, it's not impossible for the stock to go back to $10. Okay, just because of the hype. Right now, we're near the end of the year. Most people would not bother checking the stock charts. Okay, they're with their family, they're having fun, they're on vacation, whatever. When people come back, there could be a large amount of people who think that, you know what, Cosmos, it might go to Cosmos. It might be a moonshot. I'm going to dedicate, $20, $50, $500, $1,000 into this stock and to make this thing happen. I would say that the probability of everything that I've just described here to truly occur is probably around 30 to 50%. I don't believe that it's going to be above that, much above that. Is it worth a try? So, if you have a risk-tolerant kind of profile, if you're comfortable trading small caps, because this is a small cap, this is like below $50 million small cap. If you believe that Cosmos is not going to go belly up in 2023, then yes, it is a position that's worth your time and worth the try and worth the risk, in my opinion. But in that case, you would have to have a profit target that's relatively high. I would say above 100%. So if you buy it now, you have to have like a profit target that's above $10. Set it as an order, that is. Is it possible? Well, I think that it could be. Okay. And I think that if you set it to take profit between $9 and $10, you're going to have your money back. And for the rest, if you're still willing to put it in the Cosmos, then you're going to be playing for the long term. Like, for example, just like Cosmos could go to $10, $15, it can also go to $2. Well, at $2, I would say that you can use the money that you've made in this kind of like short squeeze or swing. You can use this money to put it back in the Cosmos and to stake it there for the next year, for the next 24 months. Okay, if it doesn't go belly up, if the price reaches like $1 or $2, at some point, I believe that it's still going to go back to like $5, $6. Then you can make another, pretty buck with this investment. So my recommendation is to buy Cosmos if you're that kind of traders. If you're not, then I would say don't bother. There will be better opportunities in the market. But if you are, definitely stick around and commit maximum like 1% of your portfolio. I want to say 0.5% to be honest, because I'm not so certain about the company's going concern. But if you're risk tolerant, go ahead with up to 1% of Cosmos in your portfolio.